Let's kick off with what we saw playing out in the markets last week. The market, as it seems, not managing to hold on to that 5-day winning streak, falling back by some 2/3%. Just quickly run us through activity on the week last week.
Last week, we saw a bit of cautious approach in the market. Particularly, we saw a bit of trading on Equity Bank. I think it was the highest mover last week, trading roughly about 12 million shares at close of business on Friday. A bit of foreign participation coming on that particular stock. Equally, a bit of demand coming in, particularly for a bit of KCB and a little bit of Kenyan. We're actually seeing a bit of foreign participation coming into the market. And also, we're actually expecting to see a bit of local fund managers actually coming in after the reporting season is actually over. So we actually expect to see some activity coming in this week.
So some increased activity for the market that has been battling with depressed volumes, and as I said, turnover surging some 300%. But of course, today the big focus is on the ICC ruling, on especially the likes of Uhuru Kenyatta. Of course, he's finance minister at this point in time. What are your views on how the market's going to trade ahead of this decision?
Basically, I think the market has actually been able to anticipate or already factored in the ICC ruling, which was supposed to happen this year. Which I think we're actually seeing some of the price actually took a knock towards the end of last year, and actually some of them are still trading at their lows for this year. So I think the market has actually already factored in some of these announcements that we're actually expecting from the ICC, not only from the ICC and the elections to come. And on the political side, I think the market is actually stabilized.
But if the market does find that there's a further case for trying Mr. Kenyatta, what does that mean for his position as deputy president and, of course, Kenya finance minister? I mean, would he possibly have to step down?
That is a bit of a tricky situation for him. I think they say that cabinet is the one that will actually come in or the president will actually come in and actually ask for him to step down or anything like that. But the last thing I saw that they were saying that unless you're proven guilty, you still have your position in cabinet.
Let's look at the banking sector. It seems a lot of management shake-ups at this point in time. We've had the MD of National Bank of Kenya stepping down. This was seen as negative for the stock. It was sent southwards, 5% in the red for Friday. Are there concerns about the management structure going forward?
Not exactly. I think Marambi was there to actually move the bank from a negative position to a positive position. I think now the MD that is required now, or the person who is required is now a person who is supposed to actually bring growth in the company. And I think they're looking for a manager who's actually growth oriented. The company is yet to actually pay dividends in a very long time. Last time, actually, what they did is actually they gave out bonuses to the shareholders. So shareholders have actually been pushing for a dividend, and that can only be achieved by the company performing much better than what it's doing right now, increasing in terms of reserves, increasing in terms of its profitability. And I think it's about time to see a new face at NBK with new ideas, fresh new ideas for the market.
So that could be a positive going forward, but of course that stock there were concerns on Friday, and we saw that evidenced in how the stock performed. Just run us through what needs to be done. What are the key focus areas for National Bank right now? Why has it been underperforming its competitors?
I think what National Bank has actually been stressing on is debt recovery. It had a very huge bad debt loan book, and it's actually been working towards bridging that gap and actually clearing that debt. And this has actually been achieved by the management that has been there so far. We saw the government giving out a bond issue for them, and actually which should be maturing soon, which will cover some of that debt. Parastatos are paying back. So I think for them, we're now looking at other avenues of generating income. We are looking at retail market growing. Other banks are actually focusing on retail. Banks are focusing on the SME sector, and we're actually expecting NBK to actually focus on those areas. Because of one of the major advantages I have is the huge network that they have around the country. I think they can actually maximize on that to actually expand their SME business, their retail business.
So really capitalizing on their branch network and on-the-ground presence in the country. Staying in the banking space, also the CEO position for BBK was advertised internally. Those are rumors that are going through the market. Would this be a concern that the chief might be looking to move away from the company?
I think definitely the signs were there that he's looking at moving away from the company by offering himself up for the position of Commissioner General of Kenya Revenue Authority, which actually passed him. I think that was actually a sign that he's actually looking at stepping out of the banking industry. We don't know what he's looking at. Maybe he may be looking at a different industry or a different position, but the position actually open. So we actually expect to see who will actually come in and actually step in those shoes. We actually seen Barclays in terms of growth. They've actually shrunk in terms of profitability, in terms of growth, and maybe a new fresh ideas, a new face may actually pump in a bit of growth into the company.
So fresh faces is what you're foreseeing in the banking space right now. Let's just look at some broader macro issues that are playing out. We've got Kenya, which is said to be very close to securing that $600 million two-year syndicated loan. And that's from banks, City Kenya, Standard Chartered Kenya, and CFC Stanbic. What does this mean for the country in terms of forex position, in terms of managing the country, currency rather, and in terms of interest rate environment right now?
I think we may see a slight decline in terms of interest, because if you're looking at how much the government raised last year, or is still raising in terms, there's still a huge deficit in terms of how much the Revenue Authority has been able to raise in terms of government expenditure and government needs. And actually this is an avenue for the government to actually try and get much cheaper borrowing or much cheaper debt coming in. And this actually ease pressure on the shilling in terms of, we may see the government also build up its foreign reserves, and this may actually stabilize the shilling. As we said, we're looking at levels of between 85 up to about 90 for the year, so an average about 86 for the year. And actually us having more reserves in terms of foreign reserves will actually boost this for the country. And also in terms of government revenue, government expenditure, we may actually see them actually get more income coming in. Particularly from the borrowing that we're actually seeing. In fact, we're actually expecting the results come out, I think, sometime this week in terms of to see if they have actually been able to actually secure that amount of money.
And signals are that they will be able to secure that at this point in time, which will be, of course, as you say, positive for the currency, positive for the forex position of the country, which has been a concern and was a concern in 2011.